for our Set the Market morning show here. So just trying to get people to be able to log in here successfully and overcome any login hurdles. And then we are going to get started here in a minute. If you guys can hear me okay, please let me know. That would be quite helpful. And then we should be ready to get started here. It's Monday morning, so there is quite a few things to catch up on. And we've got some big moves happening pre-market here that we need to address. So we'll do that here in just a second. I guess if you're just logging in here, please give me a quick yes in the questions or chat box or whatever it's called here, just to make sure that we're good on audio and visual, and then we're gonna get started here. But it sounds like we're good, so that's perfect. Yeah, thanks for participating. Alrighty. Very good. Perfect. All right, let's get started. Good morning, everybody. It's Monday, the 10th of February. Serge Berger here from The Steady Trader, and this is our Set the Market morning show. If you're here for the first time, welcome. What we do is we go through sort of our top of mind things for 10 to 15 minutes. I'm coming at you live here this morning from the mountains. I'm in Switzerland right now. This is I just went snowboarding this morning, so if you're wondering what the background is, that's why it's all woody and stuff here this morning. But what is happening in this market is that we're seeing a lot of movements in things that to some extent people have not been wanting to focus on, gold, and other things that people don't want to believe, which is China. So I would say let's go through those two things, and I'm going to quickly back up why we're bullish on those two things. Before we look at anything though, let me just quickly remind you where we are as far as the U.S. equity markets are concerned. This here is the S&P 500, the futures contract. It's the daily chart, and you can see even with this morning's 50 basis points move to the upside, all we've really done is kind of erased the worst of, last Friday's sell-off, afternoon sell-off. So, which was basically on the back of tariffs, right? So that's really all we've done. We're not breaking out, and again, as I keep saying, we're not breaking out until we've broken out. So none of that is taking place. What is happening though this morning, just so you know, Nvidia is actually up a little bit, and Nvidia this morning is trading about 131. So that's basically just a little bit above where it was on Friday, but it continues to work into this sort of down gap. I think it seems to me what's happening is we're seeing some people maybe cover shorts, as we get closer and closer to the end of the month's earnings report, which obviously still is a bit of ways away. So I think at this point we really have to wait for earnings to get some more clarity on Nvidia. Not wanting to get ahead of myself, but I do want to talk about Tesla quickly, and then we'll look at China, we'll look at gold, and we'll look at copper, FX, FCX is one of the stocks, and CPER. So those are the things we're going to look at. And if you guys have questions, please do let me know. So let's start off with Tesla. So, Tesla, if you look at it in many ways, it's sort of, in a consolidation period right now. If you guys remember, we actually got very bullish on Tesla back in September of last year, and that was based on the TST trender and our market rover giving us very, very strong buy signals. So what we're talking about here is this buy signal that took place in October of last year. So if you use the TST trender, you should have done very well on this one. Same thing if you use the market rover. The trender is our momentum indicator, and the market rover is our trend following indicator. So if you look at either stock, the stock in either from a trend or a momentum perspective, there were just absolutely no-brainer buy signals, both from a momentum and a trend following perspective. And you can see Tesla became a buy. But however, even though the stock remains in a bullish trend, there are some concerning things. I'm just going to quickly throw this out on Tesla. I didn't really plan on going off a tangent on Tesla, but there are a couple of things worth noting here on Tesla. And I actually took some notes over the weekend. Let me see if I can find them here. I may not be able to find them. Let me see. Yeah, don't think I have them here right now. I'm gonna have to get back to them. But basically, Tesla from a what you're paying right now for forward earnings is a lot more than one would have paid back in 2022. So, it actually remains in many ways kind of a stock that is ahead of it, ahead of itself. And that's not, again, that's not a fundamental view against the company, but in many ways it's not impossible to think the stock goes back into the 270s from that perspective. We right now, we remain bullish trend. I'm no longer in a bullish possession in Tesla because when it became a buy back in October from a trend perspective, and in September of last year from a momentum perspective, the stock basically doubled. So to me, I'm kind of neutral, but I removed it as the stock of the year for 2025 because of that. So I'm just kind of throwing this out. I just want to make sure people know that the stock remains bullish trend, but it's not at all impossible to think that the stock is going to go through a more meaningful consolidation phase. And I'm going to quickly try to show it to you like this. And maybe it even put in a double top, and then the stock goes back to 270. I'm rather open-minded on a stock like this because it's extremely volatile and has a lot of emotion involved. So I like to look at it through the lens of just, again, being open-minded. I think it's quite expensive. We had a great run. The stock doubled since we again got the buy signal. So I'm out of it, but I wouldn't be surprised if we can pick it up in the low 200s. Again, I'm open-minded. At this point, I'm just not involved. Is my point. I just want to, because we always get a lot of questions about that stock for obvious reasons. It's a popular name. Anyway, so that's what's going on there. Now, in terms of this morning, several things. We've been talking about China for the better part of the past, I'm going to call it 3 weeks or so, and we talked about the HSI. That's the Hang Seng Index, or that trades over in Hong Kong. And so this morning, that index is up another bit. Let's see here. What is it up this morning? Not actually, it wasn't that much overnight. It was, no, here, no, actually it was up. It was up 1.6% in today's session, which of course is over. So that's meaningful. And what one would expect, and we actually added the FXI and some of the China things to some of our portfolios last week. Even more so if you're an ETF Silo Pro member, you received buy signals in some of the China stuff last week, and it's up even more this morning, so that's nice. But what's happening here really is that we're starting to see, kind of what we thought could be more meaningful moves into whether it's FXI or KWEB as an ETF on that. So I think this could be the start of something larger. Again, we want to be very open-minded this year in the year of the trader. But it's something that I certainly don't want to fight if I see a trend, and I think we're seeing something. Speaking of trend, from a trend following perspective, the Market Rover, for those of you guys that are using the Market Rover, and if you're not, please make sure you reach out to our team, support@thesteadytrader.com, and they will help you come on board. The FXI ETF, which tracks China large cap shares, so in this case the Hang Seng. You can see it remains bullish trend. Now it's choppy, but what we are seeing now is we did get a new buy signal a couple of weeks ago while remaining in a bullish trend. And so that further sort of gives us more confirmation on this story. Now, very much in line with China, and we mentioned this as well last week, is the correlation of China versus other things. So I received a chart this morning from my colleague JB, who does some great analysis, and I'm going to quickly share it with you here. These are actually our internal notes, so this is straight from our internal notes document. I will quickly share this with you like this, I think. Here. So this is, and hopefully you can see this. I'm going to make it a bit larger and maybe make it 200%. There you go. So you may not be able to see this too close in too much detail, but what we're seeing is we're seeing the China large cap ETF is actually, or stocks are actually breaking out against the all country world index. And we're also seeing it break out versus the S&P 500. So and versus emerging markets. So there's a lot of relative strength coming out of China versus a whole bunch of other stuff. And there's few people that are bullish China, from an equity market perspective. There's a lot of talk about, this, that, and the other being negative. Same thing for Europe, by the way. The DAX is kicking the S&P's ass left and right all year this year. Yet the headlines are a disaster. So there's, you really need to focus on price action this year. That's what it keeps coming back to. And I think the money this year is going to be a very, very tough lesson for a lot of people that have been chart chasing, a few mega cap tech stocks for the past 5 years, and that's worked. But the problem is when that stops working and they continue to just focus on those names, they're gonna A, blow up, and B, have just a horrible missing out of opportunities that happen pretty much everywhere else, except in those names. So keep that in mind, and maybe check your portfolio. Most people are dramatically over allocated those few stocks. So that's why that could snowball into an even bigger, a bigger issue. So that's what's going on with China. Now, very much closely correlated to this China idea is copper and stocks that are related to copper. So let me share this with you. And the best way to show you that is what's going on on the weekly chart. Let's start with the price of CPER. So this is the CPER ETF, which represents the price of copper. It's a US listed ETF, of course. And you can see what happened last week is copper was up 7.6% on the week. And while it hasn't broken, back above its sort of average highs of the past couple of years, 3 years, it is certainly looking like it wants to do that here. So one stock that we're going to watch very closely, and it's not yet in a bullish trend, I believe, from a trend following perspective, but it's trading against some pretty good lows here, is Freeport-McMoRan, which just got demolished in the fourth quarter of last year for whatever reason. I think funds had to sell it down because it wasn't performing, and so on and so forth. So that's a stock that we're watching. So if you like what copper is doing, if you can get your head around the sort of tailwinds there, and that'll lead us into gold here in just a second. And you look at copper futures, which I should probably show you here, which of course is the ultimate price of it. That is not an unattractive chart. Again, hasn't broken out until it's broken out. I always say the same thing, but that is something we're watching closely. So an idea there would be CPER or FCX, the ticker symbol, which is Freeport-McMoRan as an individual stock. We'll quickly check if there are questions that I'm missing here. No, I think we're good. You guys have any questions, let me know along the way. And I guess last but not least along this entire story is really what's happening with gold. If you look at gold futures this morning, up another 1.5%, or was earlier at least, pulling back a little bit. So we still think that's a $3,000 an ounce thing before long. And that trend continues. This is a trend following story. And what's really interesting about it is that, this morning the dollar is actually bouncing again, and gold, despite that, is actually having just an absolute massive run. So, this thing has rallied something like 40% over. Let me quickly bring up the chart. So, you look at gold, for example, even just since, let's say, last October. Gold is up 17%. That's gold. The gold is pretty slow moving usually, and then 40% over a year and a half or something like that. So, these are seriously significant move. And then, we sprinkle in something like Newmont Mining, which we have momentum bullish signals on. These are the kind of names that could benefit from that. They are volatile, so just keep that in mind. But there's plenty to be liked about something like Newmont Mining. Once we start to get to the point where it's more of a FOMO in gold, and I don't think we're there yet, that's when we're going to see gold miners outperform, because they are way further out in the risk curve. than gold itself. Remember, gold, has a pretty good sort of Sharpe ratio, if you will, meaning it's got a good return given its volatility. So keep that in mind. So anyway, that's it here for this Monday. There's a lot to focus on, a lot to do. Again, keep in mind that as far as equities are concerned, just quickly going full circle here from what I said before. This morning, all we're seeing is basically a make good of the afternoon sell-off on last Friday. We're basically back to that, and we haven't broken out until we've broken out, and I wouldn't be surprised if it remains choppy, and if maybe we revisit the lower end of the trading range before we ultimately attempt to break out whenever that is, if that ever happens. So again, remaining open-minded, I think, is the most important thing of this year. These are the opportunities we see here. Please reach out to Joel. It's support@thesteadytrader.com. If you don't have the market rover yet, you need it. You need the TST trender as well, which is our momentum indicator. It's the year of the trader, and if you don't have tools that allow you to be open-minded, I think it's going to be a very, very challenging year. While from a trading perspective, people that have, the right tools could potentially have a record year. I've got some pretty lofty goals for myself. It's my personal goal. This is just me, but I think there's a 7-figure, return potential if this market's traded properly this year here in 2025. So hope it helps. Have a good start to the week, folks. I'll see you guys in the Trade Ops chat room, and in about 10 minutes or so, we'll get started for the week. Thanks for being here, and we'll see you back here tomorrow morning for the Set the Market morning show. Please make sure you subscribe to the channel. You give us a thumbs up, very important, so we can continue to do this, and so that you're alerted in real time when we go live with our analysis. See you.